Hey everyone, and welcome to The Explainer. We all get caught up in the market's daily roller coaster, right? The ups, the downs, the drama. But what if I told you there are companies out there that make money on every single ride, no matter which way it goes? Today, we're pulling back the curtain on the market's hidden toll roads, the incredible businesses that get a piece of every single transaction, right? It's a pretty wild idea when you think about it. While all of us are betting on whether a stock will go up or down, there are these giants that are just collecting a fee. They're not betting on the players, they own the entire game board. So, who are these companies? And how does this amazing business model actually work? Let's get into it.
All right, let's dive right in. Section 1, the market's hidden engine. We're going to uncover the absolutely critical machinery that makes all of our investments possible in the first place.
Yeah, it's so easy to just think of them as websites or apps, right? But that's not the whole picture. These companies are the literal backbone of the financial system. You can think of them as the essential plumbing. Every single trade, every clearing, every final settlement, it all flows through them. Okay, Section 2, exchanges versus depositories. Now, to really get this, you need to understand two key players. The easiest way to think about them is this: the marketplace and the vault. They're really two sides of the same coin, but they do very different jobs. On one hand, you've got the stock exchanges like the NSE or BSE. That's the marketplace. It's loud, it's busy, and its whole purpose is to figure out the right price for a stock and make the trade happen. On the other hand, you have the depositories, like NSDL or CDSL. That's the vault. It's quiet, it's secure, and its job is to hold your shares safely and officially handle the transfer once a trade is done. So let's get crystal clear on this. A stock exchange is all about the action. Its core, number one job is to be the fastest, most reliable place to match a buyer with a seller. That's it. Everything they do is built around executing that trade. Now, the depository, it's a totally different game. It's all about ownership. A depository couldn't care less if you bought a stock for 10 rupees or 1,000. Its only job is to make sure that once you've bought it, that share is held securely in your name, in electronic form, and that the official record shows you are the new owner. And the scale we're talking about here is just staggering. There are over 9 crore, that's 90 million, active demat accounts in India today. Every single one of those accounts, which holds our shares digitally, is managed by a depository. It just shows you how central they are to the whole system. Okay, Section 3, following the money trail. So we know what they do, but how do they actually make money? This is where that toll road idea really comes to life. Just take a look at this breakdown for a typical stock exchange. Sure, they get fees from companies who want to be listed, and they make some money selling market data. But look at that huge slice of the pie. A massive 65% of their income comes from transaction fees. A tiny, tiny cut from every single trade. And that cut is really small. For every 1 crore rupees that gets traded, the exchange might only make about 275 to 350 rupees. But think about the trillions of rupees traded every single day. Those tiny fees pile up into a mountain of revenue, and they do it fast. And the beauty is, they get paid whether the market is booming or crashing. The depositories model is a little different, and you could argue it's even more stable. Their biggest revenue stream, look at that, is account maintenance. It's a small annual fee on every single one of those 9 crore plus accounts. It's predictable, it's recurring, it's almost like a subscription fee for being in the market, and it grows every time a new investor signs up. This quote just nails the secret sauce of these businesses. It's a powerful concept called operating leverage. Building the highway, the exchange, or the depository costs a fortune. But once it's up and running, every extra car, or in this case, every extra trade or new account, costs almost nothing to handle. So as volume goes up, profits go up way, way faster.
So, Section 4.
If these are such incredible money-making machines, you're probably wondering, why doesn't everybody just start one? Well, the answer lies in the massive, unbeatable moat they've built around their castle. These are basically the keys to the castle, and they're almost impossible to get. First, you need a license from the regulator, CB, which is a huge barrier. Then you need to build the tech infrastructure, which costs a fortune. But the most powerful force of all, it's the network effect. Traders want to be where the other traders are. So more traders attract even more traders, which attracts more companies to list. It's a cycle that just gets stronger and stronger for the company already at the center. And this chart, wow. This shows you the result of that powerful moat. In the exchange space, a single player has cornered about 90% of the market. And for depositories, it's a straight-up duopoly. Just two companies control virtually the entire market. That's what you call a dominant structure. Okay, last section. The investor's scorecard. We know they're dominant, we know they're profitable, but how would you actually go about evaluating one of these financial fortresses if you were thinking about it as an investment?
Well, a simple scorecard like this really helps put it all together. And notice what gets the most weight: market position and operating leverage. These are the two concepts we've been talking about this whole time because they are the absolute heart of what makes these businesses so powerful and so profitable over the long run. So really, when you boil it all down, it comes back to a simple checklist. Do they have a dominant market position? Check. Are their revenues diverse and their profit margins sky high? Check. Are they a leader in technology with a squeaky clean regulatory record? Check. It's your go-to guide for analyzing these giants.
And that brings us to our final big thought. For decades, these companies have seemed absolutely untouchable, like financial fortresses. But with technology moving at lightning speed and new ideas like decentralized finance starting to bubble up, you have to wonder, are these fortresses truly unbreakable? Or could the next big thing in tech finally find a crack in the walls? That's a story to watch. Thanks for joining us on The Explainer.